All right, folks. So in this video, I want to go over the relative strength index indicator. So the RSI, as it's called, is one of the most commonly used indicators, and it can help you when you're using it in conjunction or in confluence with other indicators to look for entry points into a trade. Okay, so great technical analysis tool. Why I use the RSI? So it tells me if a stock has been trading at a high uh, level or a low level for an extended period of time. Um, I use this often with other indicators to show changes in direction of price action, so like reversals, reversals, or as an indication that I might want to enter and exit a trade. So it goes really well with other technical indicators, including your moving average convergence, divergence, your MACD, your moving average ribbons, your Bollinger Bands. There's a lot of other indicators that it goes well with, but it's a sign, good sign that something might be overbought or oversold in the stock market. So it also goes well with fundamental indicators and news. What I mean by that is maybe news comes out about a particular company, and because of that news, it's either irrationally, getting bought up to an extremely high level, or maybe it's getting sold off to an extremely low level. And what I mean, it's irrational. I mean, maybe the market is in a panic or a market is exuberant, and the stock over the next, several days or weeks will return to something more normal. The RSI will be an indicator of, okay, this stock is trading way too high, it's overbought, or way too low, it's oversold. Okay. So it's not a perfect indicator. I'll say that. It can tell you, like I said, if a stock has been sold off for a long time or been overbought for too long, but it can stay overbought for an extended period of time. For example, if a stock is very successful, it's a great company, has a great reputation. It's been, earnings have been, churning out really well. A stock can stay overbought for an extended period of time, right? And likewise, if a company is really underperforming or going through a terrible time in that company's business history, it can stay oversold for an extended period of time. So it's not your end-all be-all indicator, and it's best used with other signs of confluence. So sometimes it can fake you out as well. So people will plot trends on the RSI, and I can show you guys that as well, where you put, support and resistance lines on the relative strength index indicator as well. I'm not going to go into too much detail about the equation behind, the RSI, but basically it's a momentum indicator, and it tells you if something's been buying and buying and buying and buying, over an extended period of time. It takes those recent data points and it tells you, okay, recently this has been way too overbought. Or likewise, if it's been trading recently in several periods on your candles oversold, it can tell you, okay, this is way oversold, right? So, but it can fake you out. It could curl up from oversold and then curl back down and continue being oversold. Or likewise, it can be overbought and curl back down as if it's going to return to normal and continue to stay overbought and curl back up. So it can fake you out. Be aware of that. Let me show you. Here's an example of a stock. What is this? Dropbox. So you can see here on the left, 23rd of December 2020, Dropbox is appearing on the RSI as overbought. It's above this red line. And usually these lines are set at a 70 RSI and a 30 RSI. Sometimes I set mine at 80 and 20, 80 being overbought, 20 being oversold. You find your preference, right? But I set mine a little bit more extreme so that I'm sure it's overbought or sure it's oversold. But that means less trading opportunities, right? Because it's more rare that it hits an 80 or a 20, right? Here's an example where Dropbox was overbought. Okay, so what we can see is as the RSI curls all the way up, it pushes all the way up into overbought territory, When it curls back in, that's when you want to get in the trade along with signs of confidence. So I can see there's also a resistance level here. So as it curls back in, you can see price dropping, and then price drops, comes back up, comes back down. It gets, and you can see the exuberance from this left side even. Bought. Drop boxes going from $20 to $24. That's a big move, right? That's 20% move, maybe 15-20% move. And then gets sent back down, crashes back down to something more normal, 22. All right. Gets again from 22. It's bought, all the way up to 28. Another huge move. And look, it goes into overbought territory. And as it curls back down, look, drop boxes, price action, its price starts to drop as well. But again, use this in confluence with other indicators, support, resistance, and I'll show you some other ones like MACD, Bollinger Bands. We'll get into VWAP. So use this with caution, but it's another indication that the stock is about to make a move. Here's an example of something being oversold. Again, Dropbox, same thing. This is in 2019, August 28th. We can see there's a huge sell-off. It went from $26 all the way down to $17. And you can see for many days, Dropbox was oversold in oversold territory under this blue here. And as it curled back up, you can see, and look, there's your auction zone. You can see there was a buying and selling debate. Should we buy? Should we sell? Should we buy? Should we sell? And when the buyers won and it bounced off support and the RSI curled back up, the price went up significantly. It went up from $18 to looks like about $21, $22. Okay, then it came back down, started getting sold off too much. See, when it sells off or gets bought up too much, like consistently over a period of time, it's just constantly, getting bought and bought and bought, or sold and sold and sold. This is when the RSI acts up and says, okay, we're at these extreme territories. And so you can see it's getting bought, it's getting sold off, and then it levels off, enters an auction zone. It gets sold off, sold off, sold off, sold off some more. And it keeps getting sold off at an even faster pace. And then the RSI dips into oversold territory. And as you can see, when it curls back up here, December 13th, 2019, it curls back up. You can see price start to curl back up. And we know we're at another demand zone because you look on the other side of the chart, you could draw support across this whole chart. So that's the way we use RSI, right? Here's an example of the RSI bouncing off of a support at the 50 line. Now, when RSI hits 50, it's considered either overbought or oversold. Sometimes that means the price is returning to normal, and often it's returning to an auction point. So when it returns to 50, it sometimes bounces off. It can act as a support and resistance itself. So you can actually draw a 50 line on your RSI. You can draw any support lines, right? And you can see here as it approaches 50, it bounces, and look at price. It bounces as well. Okay, must have reached a demand zone, right? So this is RSI. Again, I'm not going to post the equation in this video. Maybe I'll do some content on the specifics of RSI, but the general thing to note is it's a momentum indicator. And it tells us when something's being bought consistently too much or sold consistently too much. It's entering an overbought territory or an oversold territory, and that can be used as an indication of momentum that price is about to change direction or continue in a way. Because as it approaches these, oversold or overbought territories, we might consider that as continuing a trend, right? So you have to understand there's millions of traders seeing the RSI as well. It's one of the most common indicators. But again, we want to use this in confluence. We're going to tie all these indicators together and put them all together in a little educational video. So you guys can put all these together and create your own sort of technical trading plan. But this is an idea of what RSI does. Thank you guys for tuning in, and I'll catch you in the next video.